All right. How's everyone feeling today? Good? Yes? No, okay. Um, I'm sure everyone will be feeling great after we go through our program. And of course, at the networking, I look forward to meeting you all as well. So, hi everyone, my name is Finley. I'm a program manager at F10 running the incubation program. So, welcome everyone to join us for Singapore's Incubation Programs Demo Day. Right, so we're here today to showcase the hard work and innovative ideas our participating startups have been working on the past few months. They have been working on refining their business models and working closely with our team of coaches and industry experts to bring their visions to life. I would like to invite our head of Asia, Jonas, to say a few words and to share more about what F10 is doing here in Asia. Jonas, please.
Welcome everyone. I am very excited about today's Demo Day! Yeah. Here we are. And I'm also very proud about 10 amazing startups that will be graduating today. To start off today, I just want to give you all a quick introduction about F10. Those that know us, we have a couple of updates, and those that don't know us yet, I can give you all the insight about us. F10 really has the mission to unite tech startups with big business to shape the future of banking and insurance. And we were founded in 2015. Right now, we are actually in 4 locations. So Singapore is one of them. Zurich is where it all started. We are also in the Nordics, in Sweden right now, and we are also in Spain. And in the last 7 years, we incubated startups from more than 85 countries, actually. We are an ecosystem, and the ecosystem really is the rocket fuel to what we do at F10. Of course, you're here for the startups. These are one of the very important stakeholders of our ecosystem, but we work also with leading financial institutions such as Franklin Templeton, a Swiss stock exchange, a private bank, Julius Baer. We work closely with our investor friends. We are a VC ourselves. We have ourselves a fund, but of course we co-invest together with leading investors. And then, of course, mentors, super important. These are really subject matter experts from the industry. And last but not least, thank you, Google. Partners like you really make us thrive even more. We have 2 kind of, I would say, flagship programs. We have, on the one hand, the Incubation program. The Incubation program is the one that is just graduating today. That's actually the batch 4 in Singapore. It's really an early stage program for fintechs, pre-seed usually. It's a 4-month program. We have 5 masterclasses, and we do that twice per hub. So that's also done in the Nordics. That's also done in Switzerland. And here in Singapore, we invest 70,000 Singapore dollars in the next batch into each of the startups, plus follow-on investments. The acceleration program, as we define it, is more for scale-ups, scale-up fintechs that we match with our corporate partners. Our corporate partners have problem statements or innovation challenges where they're looking for solutions. And that's when we go out, we source those scale-ups, we match them and bring them together. Just a quick overview of the journey F10 I mentioned. We started in 2015, span off in 2016 with the initial partners being Six Group, Bank Julius Baer and PwC Switzerland. After 3 years, we really already became a market leader with more than 10 corporate partners. And we felt like if we want to further expand, we have to geographically expand. And that's when we started in Singapore just 3 years ago. We started here. And in the last 3 years, we also expanded to Spain as well as the Nordics. This year is a special year for us. Earlier this year, we had a funding round ourselves as F10, and we had the management buyout plus external investors coming in. And we are also right now raising a fund, which we start deploying from next March onwards, really with the mission to become a global leader in the fintech innovation space. A few numbers. just to screen startups, we see 2,500 startups every year. That's actually 11,000 startups since we started in 2015. 230 startups so far participated in our programs, and overall they raised 280 million together in funding. And one of a notable investment that happened this year is, for example, Yokoi, that raised 80 million, led by Sequoia. Pretty exciting stuff. What have we done in the last 5 months for the program? So we kicked it off in August. We worked on ideation, validation in the first masterclass. Second masterclass was all about problem-solution fit. Then masterclass 3, we really worked with the startups on funding, getting investor ready. And in the last masterclass 4, it was all about marketing, sales, growth hacking. And here we are, before Christmas, we are holding our Demo Day week. A few more stats. 30% of the sessions were actually one-on-one sessions. We have 5 sub-verticals in the fintech space, and we did more than 50 introductions. We have startups from 5 countries. Notable here is one startup from Qatar. Thank you, Michael, for coming here, despite having your World Cup back home. 100 hours masterclasses, and I mentioned it already, some of the leading partners that we work with. Mentors, super important. All the mentors that are here today, very grateful to have you as part of the F10. You guys are a very critical element of our program. And here are a few impressions. We had dinners, drinks, online sessions, workshops, all you can imagine, of course. And last but not least, upcoming programs. We have, I mentioned it earlier, we have the Batch 5 actually, that is coming up in March. It's another F10 incubation program. And we also have, for our partner Franklin Templeton, on a continuous basis, receiving applications also for an incubation program independently here in Singapore. With this, I'm done. Thank you so much for being here again today. And now it's my great pleasure to welcome Esna Ong. She's Startup Success Manager, Google for Startup Cloud Program, APAC.
Thank you so much. Good afternoon, everybody. How many of you, it's your first time today ever at Google? Oh, wow. Okay, sometimes it's like half-half, but I feel like now it's 80%. So we had a really good time with all the founders earlier today, showed them around the office, including our climbing walls and our gym. I'm very happy to see all of you. So I'm Esna, I'm from the Google for Startups Cloud Program team. So I'm part of a wider team which consists of VC engagement folks, customer engineers as well. And so yeah, if you want to connect, please scan this. And before we proceed further, I just want to show just a very short but a really nice video.
When we were trying to name Google, we actually went through thousands of names.
The name of the company has now become its own verb in the dictionary.
Let's Google it.
You can Google it.
I Google practically everything.
6 simple letters on a plain white page.
Being able to do searches in any language about any country.
As you're typing, Google finishes your questions for you.
At Google, we have been working on organizing the world's information.
Our goal is to digitize all the books.
Today, Google announced Gmail. Email for everyone for free.
Google is mapping the entire world to make it more accessible to people everywhere.
Google is jumping into the mobile market.
Android was built as an open platform for everyone to use and build on.
This is Chrome. It's a faster, safer browser for the open web.
Google is unveiling what they call the knowledge graph.
We needed to understand the world the way you and I do, as objects and relationships between objects.
Today, Google got another useful feature with Google Now.
We are providing you with answers before you've even asked for them.
One of my favorite cards is the one that shows traffic data for your commute to and from work.
Think about how far Google has evolved from the 10 blue links.
We asked ourselves, how can we assist you right when you need it?
Okay, Google, call the Walker Art Center.
It's not just desktops, phones, and laptops anymore.
Okay, Google. 유진이한테 5분 늦는다고 문자 보내줘.
It's watches with displays, car consoles with displays.
Okay, Google. Let's go to the aquarium.
How can we help you get things done in as few steps as possible?
Okay, Google.
Okay, Google. Show me my photos of Lucas with the pumpkin.
But we have to remember, we have a long way to go. This is just the tip of the iceberg.
Yeah, so I hope you like that little reminder of how Google has really grown from a very humble ads placement platform to the entire ecosystem here. A technology enabler that billions of users use every day, and that very same technology is what can power your startup or your portfolio or your community startups now, ranging from sending their very first email to putting their first ad, putting their first video on YouTube, and of course, hopefully I'm from Google Cloud, so hopefully building their backend infrastructure on cloud as well. And we are proud to be the startup hub. And that's why we're also really happy to partner really awesome partners like F10 to grow their ecosystem. And we really just want to see more and more startups grow. And I think most of us here were probably at Singapore FinTech Festival. So this is just some photos of me and my team at our booth that was that you can actually deconstruct. And we shipped it off to other events. And we're really proud to be the cleanest cloud in the industry. You can see some of the stats there, 100% renewable energy. And I think that's important for all of us that are building, really game-changing technologies in the fintech space. Also want to take this opportunity to highlight that we are having a call to our very first Climate Finance Accelerator held in conjunction with KPMG and MAS. So if you'd like to spread this to your community or if you're a startup, please scan that QR code. Let me know if it doesn't work. I have a history of putting QR codes that don't work by accident. So the deadline is next month, 31st January. So yeah, we're super excited about this and hope to see many applications from this crowd. And just very quickly, we also want to highlight ways that we are supporting fintech startups. So we actually launched 2 programs, both this year, so very new, and we often meet people who have never heard of this before. So we have the Start Tier, which is for bootstrap self-funded startups, so we give 2,000 in credits, and we give 100,000 in credits to venture-backed startups up to Series A. So the T's and C's is super straightforward. But firstly, we cover, for the 100K program, we cover 100% of whatever you use, up to 100,000. And the second year, we continue supporting 20% up to another 100,000. And the T's and C's, very clear. A lot of startups ask us, do I need to do like a minimum spend? If I don't finish the 100K, will you take it back from me? No, it's very straightforward. As long as you're equity-based, you have equity-based investments, less than 10 years old, not past Series A, and not used more than 4,000 in Google Cloud credits before, you could gain from the 100K scale tier, which will also give you dedicated support from our own team of customer engineers. We also have a huge network of technology partners that can conduct free trainings for you as well. We definitely have a really huge network of partners, which I will also touch on later. And of course, our startup success team will be journeying with all the startups because we know most of them are coming from other cloud platforms and definitely need a lot more assistance. So we are really here, and you don't need to feel like it's like a mountain to climb. So this is the link if you want to take it down, apply for it yourself, share it with your community. And also just very quickly want to highlight that some of you, I met someone who flew here from the US. He's sitting at the back. So, if you're here and you're new to the region, you want to explore it as well, please tap on our entire APAC network. We have 18 Google for Startups partners, including like Herbal in Thailand, Revel in Singapore. And they're really our ambassadors on the ground to help you with all this. How do you make the best of Google technology, introduce you to the right people? And yeah, hopefully you will start, build, and grow with us. And I hope you enjoy the rest of the demo day. Thank you so much, everybody.
All right, thank you, Esna. So up next, we'll be having our panel discussion. May I invite the panelists up to the stage, please? So we're having a panel discussion on embedded finance today. For all those of you who are not sure what embedded finance is, you may have heard the term open finance or maybe banking as a service as well. So basically what it is that it refers to the integration of financial services into non-financial products and services itself. So for example, like GrabPay and also Pay Later. And of course here we have a startup, embedded finance startup here with us, Niem. All right. So for our panelists tonight, they are industry players and thought leaders who are at the forefront of this very trend. They will share their insights and experiences on the current state of embedded finance and its potential impact on industries and consumers. We are very honored to have with us here today. Okay, yeah. So we're very honored to have with us here today Ruben Lim here, Scott K, and also Yogesh Sangley. So before we start, I feel like this is so weird because we're all in like a straight line, right? I know, right? Cool, much better. Okay, yeah, it's a chill session today. All right, so just to start off, may I invite you guys to introduce yourself, tell us a little bit about what you do as well. So Ruben, over to you. I'm sorry. It's yeah, Ruben, over to you.
Hi, good afternoon, everyone. My name is Ruben. I'm from Singapore FinTech Association. I'm currently head up the team that operates and plan and basically do all the awesome stuff that we can do for the ecosystem. And let me just leave it as that. Yeah, thanks.
And yourself, Scott?
Sure. I'm Scott K from 1982 Ventures. We're a fintech-focused seed fund investing around Southeast Asia. We're probably the most active seed fund in the region, focusing specifically on fintech.
And yourself, Yogesh?
Yeah, hi. I'm Yogesh. I head Instarem, which is a consumer payments arm of Niam. Niam is a homegrown company for Singapore-based headquartered with a lot of investments from Singapore-based companies, and we became a unicorn about a year ago, and we've been kind of growing pretty well. For us, I think we've been building infrastructure, payments infrastructure across the world, and the only thing that I would like to tell founders here is that not long ago, we were a very small company, right? So look forward to kind of growing fast. If you get the right partners, you will definitely grow at the speed that you want to.
So before on that note, Niam is our first unicorn in Singapore, a first fintech unicorn. And when the news broke out, the fintech space was ecstatic. So it was really, really awesome to have our first fintech. And in fact, I think in the space of unicorns in Singapore, fintech took the highest numbers as well. So I think that's one thing good that we are all in fintech here.
All right, round of applause for Niam.
Thank you.
Okay. So yeah, thank you, Yogesh. To start this discussion, I just maybe wanted to pass it on to you, Ruben, as well. SFA actually wrote a report on embedded finance earlier this year. So want to get an understanding of like why did you all pick this topic and maybe some of the trends that you're seeing here in Asia.
Sure. I personally like to make sessions interactive. So in this case, can we just do a quick poll for that matter? How many of you been to McDonald's in Singapore and you have tried ordering on the screen itself? Almost everybody. And towards the end, you notice that now you can actually make a donation. So how many of you actually don't? Okay, forget about it. I won't ask that. But I guess where I'm coming from is that in the sense is that embedded finance is actually very exciting, very sexy, because finance is really hitting all of us right now. It's actually so intrusive, so embedded, so within us that you don't really see it. So even things like when you're ordering McDonald's or fast food, you are actually donating money at the same time. When you are shopping in CapitaLand malls, you are actually earning points, and not just points, but those points are in your fiat dollars equivalent, and you can shop and spend those credit in the very next day. Even as traditional as NTUC. For those foreigners who are not familiar, NTUC is actually our trade union in Singapore, but they do have a lot of enterprises. So one of the enterprises they have is actually supermarket grocery shopping. So it has become so embedded to the point where right now rewards. So to those who are in the retailing space, even rewards is now something very super useful in terms of embedded finance, and you can actually earn points immediately that you can use immediately. For those who are a bit older, or my age, gentlemen here, I'm sure we are all in the same category. If you recall, long time ago, if you go to malls, you have to queue up with your physical receipts at the customer service desk, and then they will go through your receipts, they will see how much you spend, they will give you some voucher, they'll put a stamp, and then you can then reuse those kind of things, your car park credit as well. But now technology has come to the point where embedded finance can leverage Internet of Things with all the hardware that's made available as well, that now it's so pervasive that you need, that without it, you just feel that something's amiss. Nobody queues up right now to get redemption. Nobody queues up to and in fact, the next, you immediately spend those money. So I guess that's really where embedded finance is right now.
All right, thanks so much. And Scott yourself, Scott is really big on this trend. He was an early investor in this company called Brick, a financial API startup. So like maybe you can share a bit more, Scott, about what you feel about this and maybe your investment mandate around this as well.
Yeah, it's very much a part of our investment thesis. But as you're telling that story, I was just thinking this morning of, I go to Hugs Coffee, get my coffee, I pay with my DBS card, I get shopback points, which they're like a Soonicorn, I think. They're not quite there. But you think about embedded finance, a lot of people immediately think of buy now, pay later, or they immediately think of a few of these industries that are probably the biggest in the headline, but there's so much, everything you do in life, there's usually a financial reverse, kind of a yin and a yang of when you do something. And the more seamless that is, a lot of that is now powered by fintech. And so you mentioned companies like Brick. I think now today is a really, it's as many great companies as you see today that you say, okay, well, Neum has solved this problem, and they've solved a lot of problems, but actually, by putting these layers in place, the bricks of the world, and having those kind of data layers and things like that, you can actually start to build a lot more and more interesting things. So it's getting easier, it's getting better, it's easier for founders now to launch fintech companies, and it's time now in Southeast Asia to build that next level up, that next layer of services, whether it's better loyalty programs, whether your personal finance apps, which there's some good ones out there today. When we look around the region, in Indonesia, we have an investment there called a company called Pina that's just doing this. They couldn't be built. They couldn't have been built 24 months ago. The pieces weren't there yet. You couldn't figure out a way to connect into someone's BCA account and see, oh, I actually have this much money in my BCA account unless I physically logged in there. So it's getting a lot better. There's so many problems to solve. We're not even close to being. We're just getting started.
Right.
Yep. I just to add to that, right? I mean, I think when you look at where we started, right? Neum started. We started as Instarem, right, which is a company I look after, and basically what we did was we built infrastructure for ourselves, and we built it in such a way that we had partners come into us and say, can we use your infrastructure, right? And they were actually competitors, right? They were competing with us, and they actually said, can we use your infrastructure? And we were like, oh, looks like an idea. So those days, it wasn't that like words like BaaS and embedded finance were just being talked about, but it was payments infrastructure. And payments infrastructure, frankly speaking, across the world is broken. It is not in a good place. And building that infrastructure brick by brick, you package it in such a way that companies which are really good at looking at front-end solutions are able to kind of build on top of it through simple APIs and really kind of go live very quickly. So right now, whether you're, for Instarem, we basically allow you to send money, we allow you to, spend as you go with your card. We also allow you to do businesses to send money. And all of that is built off an infrastructure, which is also used by hundreds of companies across, like Aspire uses us or any other startup. It just gives you that freedom to go live faster, test out a lot of products in the market, and eventually, if you think that that's your secret sauce, you should go ahead and build your own infrastructure, right? But there is part to going there. You don't need to spend a lot of money and time and effort to do stuff and move forward. Yep.
All right, thanks so much for the sharing. And that brings me to the next question, open to all of you here as well. So, I just want to find out more about, like, what kind of benefits are there for businesses and consumers in the future in this area as more and more businesses take on like embedded finance into their offering. What would you see are the next trends upcoming?
But one of the things we're seeing, it's not so much going forward, is that a lot of businesses are pulling back in a way. So I think 12, 18 months ago, every business wanted to do everything themselves. And the cost of capital has risen a bit. So now all of a sudden tying up a lot of money in a loan book, going out on a lark and thinking they're going to build a NEOM in their whole back end just to service some niche product, it doesn't really make a lot of sense. So I think the partnership idea is becoming much stronger now. The idea of not going to just build everything. Maybe some companies have promised they're going to eventually build all these things, but 12 months ago, every company at some point you got to page, because we only do fintech, so we get a lot of people pitching us, and then at page 11 they're like, and then we're going to do lending, That's always that's how we're going to make money, or that's where we're going to end up. But it takes a lot to do those kind of things. It takes a lot to be able to move money cross-border. It takes a lot of expertise to be able to run a good lending program, to underwrite insurance products, just to bring data in a clean way and move it around. So I think there's more opportunities now, and you're seeing companies kind of step back and say, actually, we're going to work with partners on this stuff. We're not going to try to be so monolithic.
And just to add to what Scott said, is that about a year and a half ago, literally everybody wanted to be a fintech, right? Like every company was saying, I'm a fintech, Google wanted to launch something, and I'm sure they're doing well with GPay. Similarly, every single company wanted to kind of become a fintech, right? And honestly, I think it's a good thing, right? I know that one of the biggest fintechs in the world is Starbucks with their prepaid program, right? I mean, it's one of the biggest fintechs in the world. So we're expecting more and more, but not everybody can be a Starbucks or a Google. I think it's a great idea to kind of build on top of something and go live to market faster, right? So therefore, I think just this whole idea of embedded finance and using it to move to next, and they're live use cases, right? I mean, like right now, we have a product which is a card issuance product, and frankly speaking, if I were not building that product as an internal customer to NEOM, if I were building it on my own and not going to NEOM and kind of using the existing APIs and building a good front end solution, it would take me at least 3 years to go live, versus I could go live in months. And partners like Aspire could go live in months, and Pelican could go live in months, and VoloPay could go live in months, right? So that kind of gives you speed to market. At the end of the day, money is expensive now. Like everybody is talking about it, and the faster you can show revenues instead of spending time, it's similar to what Google's doing on the cloud space, right? It's easier to kind of just go embed yourself in a startup program and move forward.
I have been saying this quite a bit, especially in response to embedded finance. I'd like to take the fin out of take the fin out of fintech. So what I'm driving at is that many years ago, even before fintech, there were basically software as a service or PayPal and what's not, and then fintech came up because fintech basically financial technology or prop tech, edutech, femtech, whatever tech you call it. So it's basically technology for the sector. But in today's context, fintech, some of the solutions, not all, but some of the solutions are sector agnostic. And embedded finance is into various sectors. So all the examples that the panelists has shared so far are all not in the financial space. Starbucks is in F&B, or if not even in retail. So taking out of fintech is what embedded finance aims to do. And I think what's beautiful is that then it makes every other company a tech company, because you are then using digital solutions, in this case financial transactions, financial interactions, into your business. And in that sense, the world's the limit. But of course, what we are seeing right now could probably be along the lines of lending, insurance, loyalty points, etc. So from the report, there are 5 segments that we call out, and these are what you're seeing right now. But in terms, and also insurance. But in terms of how far this can go, it really depends on how creative you want to get.
All right. Taking a note from you, Jonas, I think we need to take the F out of F10 as well. So, I mean, so far we've been talking about opportunities. I just want to know the risks as well. So, embedded finance is not really a regulated space per se. There isn't a special like embedded finance regulation by MES. But of course, any type of finance carries it with itself risk in terms of data, in terms of cybersecurity. Maybe could you share more, Yogesh, more about the regulatory hurdles that you are facing?
Absolutely, and I know that the airways have been completely occupied by things like FTX and other stuff, and everybody's talking about regulation. At NIAM, we always took a different path, right? As embedded finance, you actually don't need regulation, right? You need to create the infrastructure. I worked for a company before whose stated goal was that we don't want to be regulated, right? They were like very, very clear about that, right? And it is one of the top fintech companies in the world, right? But having said that, we were very clear from day one that we want to be regulated. We want to be regulated. We are regulated in 40 countries, and we offer even the regulatory piece as a service, right? So we kind of offer you our licenses and the whole embedded solution, right? So that founders are free to use, focus on their customers, right? At the end of the day, you are as good as what your customers find you to be. So leave the rest to companies who are specialized, especially regulatory stuff requires a lot of thinking around how do you kind of take care of stuff. Apart from that, there's one more aspects that people don't talk about, which is banking, right? Because everything that you do in fintech touches the banking infrastructure. And while everybody's saying that we are building stuff which is outside of banking, being an ex-banker myself, I can tell you banks always win, right? So there's no escaping that, right? So you have to have bank accounts in various jurisdictions, move money across and stuff like that. And that's very difficult for a startup to get, right? I mean, especially if you're dealing in cross-border, if you're dealing in the C word or crypto or whatever you call it, right? It is very difficult to get bank accounts. So finding the right partners who offer you that end-to-end service, right? From bank accounts to regulatory know-how. It is years of experience that has been bought in, and we've created those layers and stuff like that. So that's very important as you kind of move forward. Yeah.
We always have a view that, well, we like regulation. We only really deal with founders who are have a good understanding that the regulator is their partner. You have to look at the regulator as your partner. Everything you do is going to touch regulation at some point if you're in fintech, and that's okay. It's not a bad thing. You just need to be prepared for it. So if you think you're going to not be regulated, if you're going to try to go head into the wind, you're probably going to get into some trouble and make life more difficult for yourself than you need to, and probably not going to have much at the end of the day. So we also kind of, my view is that finance is, as much as we're innovating, we're doing things better. A lot of change is very incremental, and new technologies come about, and we can do things a bit differently, a bit better. There's a lot of opportunity in that. Probably compared to some other industries, it's more marginal gains. Regulation, a lot of times, even if there's not a specific regulation to say, okay, you're doing something embedded finance, you're probably just doing still a few things that are also still regulated. So just because you do it, you deliver by an API instead of put a door front out, it's not that different, and the regulator is not going to be so wowed by the idea that you have an API or a website or something else to not realize what you're doing. So I think you have to be just pragmatic about it. Fintech, use regulation to your advantage. Get started early, talk to the regulator. Actually, as much as you read on Twitter that regulators are dumb and they don't know anything, they actually can be very helpful. They can usually guide you. They can help you find partners. Once you talk to them, it's usually a really good relationship, and you can work with folks like the SFA and others to help you build those inroads in.
I don't think anyone from MES is here, right? But these guys are very, very friendly. So for those who have not interacted with our regulators here, they are awesome. I'm not saying that just because we need them, but really these guys are awesome here, and they have been very, very forward-looking. A big shout out to MES here in Singapore, because they are so forward-looking that they have come up with so many innovative projects that while regulation is always playing a catch-up, but they have been trying out new things. Whether is it through there are various tons of projects, your Guardian, Orchid, Partior, Ubin, you name it. These are all very fanciful names, but these are all project names that are very forward-looking in terms of whether utilizing blockchain, etc. I can go on and on. But back to the regulation in fintech, in embedded, I take a reference from Scott's point as well. It's about understanding the whole value chain of embedded finance and which part of the journey are you at. So if I were to look at embedded finance as just an enabler, then technically you are just providing a solution to cover end-to-end. So in that sense, in Singapore itself, the regulation is very much activity-based. So it disregard whether you are big or small, fintech or bank, it all comes down to the activity that you're performing. So in that sense, it's a lot of clarity there. So long if your activity hinges on any of those acts, then you do need a license for that purpose. And if you are, but in the case of embedded finance, if you are providing a solution, a technology, for example, like RegTech, then you may not necessarily fall within that space. So again, depending on where do you play.
All right, there we go. Lots of tips here as well. So now, just to kind of sum up what we have done, just want to see also, like, if we take like 10 leaps forward, right? What do you guys see in the future of embedded finance? Like, what is changing? What will change? How will it change the landscape across Southeast Asia in future? What do you all foresee?
If I were to take a step, would be probably maybe 15 years ago, where how Steve Jobs insists that Apple phone should only have one button. So similarly, I think when it comes to embedded finance, the way I look at it is, how can everything that you do, the number of steps that you take be shortened, the friction is reduced, and as a result, encourage more spending, more sticky. And that also not just only in terms, embedded finance now really very much comes in the form of B2C or B2B2C. And how can we then have that also plug into the B2B space? In short, embedded finance will help you to spend more, use more, do more, but yet reducing that friction that you have. And so taking a reference, again, back to Steve Jobs, one button, solve everything, and hopefully embedded finance can reach there as well.
I think I really agree with the sentiment there. I don't have a crystal ball either. I think fintech of all types, if you talk about embedded fintech or not, does really well when you don't notice it, when it falls behind the wayside. When you try to make a payment cross-border and it doesn't make you want to smash your computer, you're feeling pretty good. Like that's what it should do. And so like I said, there's more and more pieces coming in place. There's more and more things to build on top of. We see more and more of our portfolio is being delivered either through APIs or some kind of, it's sort of headless. Usually I think when we used to think about B2B technology, it was somebody's dashboard who was going to be in somebody else's office and it was going to be a user login. It's not that anymore. Everything, there's really rich ecosystems out there now to tap into. That didn't exist before. When we looked at, we've been doing fintech for 7 years now in Southeast Asia. When we looked at the first players that were doing like SME lending, for instance, they all said, oh, we're going to go out and get all this data on these SMEs. There was no data to get. It all came in paper, So now you can plug into ecosystems. There's marketplaces, there's other platforms that just manage logistics. There's actual data that you can tap into without having to scan a bunch of documents or visit someone's office. And that is what will allow the next entrepreneurs to build something. So I don't know what people are going to build. every day that's what's exciting I get to do, is hear some new ideas that I don't have. And so very optimistic, I guess.
Yeah, absolutely. I agree with the sentiment. But, if you had to take two views of it, right? One is a pure customer or consumer or even a business view, right? I mean, the role of embedded finance or payment infrastructure is to get out of the way. Nobody wakes up in the morning saying, I want to make a payment through someone. Like, who cares, right? People care about what they want to do. They may be buying something, they may be sending money somewhere to a dear one, or investing somewhere, buying crypto if they're crazy enough. And so basically I'm saying that it's just a means to an end, right? So our job is to get out of the way. And we are going to see more and more embedded finance companies who are going to get out of the way, right? Not shout saying we are in between the journey and we are kind of blocking your path and stuff like that. So even making regulation simple, bank accounts simple, moving money simple and getting out of. So it's all about money simple and moving out of the way. That's from the customer point of view. The second piece that I feel pretty strongly that's going to happen is consolidation. I think there are too many players in the market, too many small players in the market. Money is expensive. I think it's a good time to consolidate, right? So I think that's a great thing that you will see. A lot of consolidation, a lot of companies being bought, a lot of companies being sold, a lot of companies shutting down, unfortunately. But that's going to happen, right? And that's what I see in the next 12 to 18 months. I can't see 10 years down the line. But yeah, I mean, there's a lot of exciting stuff happening in this space. And, I'm hoping that one of this batch of F10 or the next batch of F10 turns out to be the next unicorn soon. So looking forward to that. Yeah.
My friend, are you hinting something? You're a huge unicorn, so probably they will be responsible for some of the consolidation.
Yeah, we're always looking for companies to buy. It's a good time. It's a good time to buy companies.
So for my startups here up front, you know who to look for, yeah? All right. Thank you so much for your sharing today. I think it was really insightful. I think that your points on how embedded finance will one day be so pervasive in our life that we won't even notice that it's there. We're kind of engaging with all these payment gateways without even knowing actually that it is a payment gateway, it is a loyalty program or anything. So yeah, really thank you so much for joining us on this panel today. Thank you, Ruben. Thank you, Scott. And thank you, Yogesh.
Thank you. Thanks a lot.
And as a gesture of thanks as well, we have a little bit of a gift for you guys.
Thank you, guys. Christmas present.
Yeah. Okay, thank you. Oh. Together.
Big smile. 1, 2, and 3. Thank you.
Right, and for the moment that we're all waiting for, the startup pitch is here. So the fintech industry is constantly evolving, and we are proud to support and nurture the next generation of fintech startups. Each of the startups you see today have the potential to make significant impact in the world of finance and technology. So without further ado, let's begin the presentations and get a glimpse into the future of fintech. First up, we have C Wallet. So C-Wallet here allows users to receive their salary on time while providing transparency to employers, empowering merchants to accept online, offline, on-mobility, and on-delivery payment transactions, and enabling expats to send money anytime, anywhere, any currency. Over to you, Michael.
Hello, everyone. I have been doing this for so many times, but still petrifies me, so give me a moment. Okay. Hello, everyone. My name is Michael, and I'm the CEO and founder of C-Wallet. And we are on a mission to empower the unsung heroes of the Middle East. It was 2006 when I first arrived in the Middle East, a typical migrant worker looking for a greener pasture in the desert. During that period, I couldn't open up a bank account because my salary was below $1,000. Fast forward 2022, I present you Raju. He's still unbanked. He's receiving his salary on cash basis, and there's no safe haven for his hard-earned money. And they are deprived for basic financial services. Forget about crypto and NFT. You know, the basic financial services is not available. Then we have Yaya, our ever-loving nanny. She doesn't have time because everything is closed on her day off. So she's stressed out to send money home. Moreover, there's about 540 billion remittance outflow from low-income and middle-income countries. Now, those individuals are considered heroes of their economy as well as breadwinners of their family back home. Now, in the Middle East alone, there's about 35 million migrant workers in Gulf cooperating countries, including Jordan and Lebanon, out of which 31% are women. Now, let's focus on Qatar, who's having the World Cup now, which I'm planning to reach by the 18th. There's about 88% of the population are migrant workers. Now, if we combine Oman, Kuwait, and Qatar alone, there's about $2 billion on remittance market share, which we are trying to tap into in the next 3 years. That is the same reason why we created C-Wallet, allowing users to conduct peer-to-peer transfer, pay online, pay with QR code, and even pay with their face using biometrics. Now, since they're unbanked, every time they go home from home country or other places, we are providing them multi-currency prepaid cards so they can conduct different types of transactions, either online, offline, on mobility. Moreover, migrant workers, low-income migrant workers, domestic helpers, and blue-collar workers like Raju and Yaya can receive their salary on time, conduct various types of payments, and ultimately send money home anytime, anywhere, with any currency, including cryptocurrency. Yes, we are not alone. Therefore, we're positioning ourselves in terms of multifunctionality and high on social impact. We are promoting ESG, what's Sustainable Development Goals, that allowed me to pitch in United Nations HQ last June 2022. Our revenue model is very straightforward. We conduct 1.4 service charge in our marketplace because we're allowing individuals in Qatar to order food, medicine, and grocery directly from home country. Similarly, there's about 2% commission on merchant service charge, and there's about 35% profit sharing on remittance. This is probably the topic a while ago on decentralized finance, where we partner with money transfer operator to allow us to conduct money transfer cross-border on a regulated manner. Now, since our inception, we are serving 1,500 users. There's about $50,000 in sales. And with our partnership with the largest money transfer in Qatar, we're tapping into 1.5 million verified customers. Visa is also investing in us of over $15 million for over 5 years, and we're partnered with the largest bank in Middle East and Africa, which is Qatar National Bank. And yet we are also approved by Qatar Central Bank to conduct local payments and cross-border remittance. So here's the dream team. I myself is a computer science graduate with master's in business in HSC Paris. I've been dealing in the Middle East for about 15 years and a certified professional to develop platforms for people with disabilities. Dr. Abdul Mohsen is my co-founder, and we had a couple of startups since we became classmates, friends, and now business partners. And we are supported by fintech architects in the payment space. So I'm here today to ask for $3 million in funding. We already have a soft commitment from IME Pay in Nepal of over $1 million. We will use the funds for product development, acquiring more customers, and penetrating in other markets in GCC, since we have already office in Dubai, UAE. So, what are you waiting for? Join us now. Invest in us. Let us fulfill our dream in empowering those heroes that is building the beautiful region. Let us promote a cashless society without leaving anyone behind. In the end, we can only do good if we're doing well. Thank you.
Thank you, Michael. Up next, we have Predict Rams to be here. So Predict RAM DeFi is a risk management protocol which uses AI, ML, and Web3 technologies that create asset-backed, event-specific ETF tokens contributed by professionals to mitigate individual portfolios risk at low cost.
Thank you. Thank you, Pillai. Hi, I am Subir Singh, founder and CEO of Predict RAM. And I am working in this financial market and of portfolio management services for last 12 years. And during my this whole career, I basically facing some, during my this whole career, I face some big challenges like I have to keep updated myself about the market events and all. Because anytime your, the HNI client's going to call you and ask for the market updates and the, the portfolio status, and the HNI client is the ranging between $1,000 to $1 million portfolio. So I have to be market updated because I cannot say that I am with my family and blah, blah things to my HNI client. So of course, he's going to go somewhere else for the better services. So it's very difficult to keep updated yourself about the upcoming market event. So just exactly after this call from the HNI client, I received another call from the small investor. And to be honest, I didn't bother to pick up his call to provide the services or to provide the update about the market. So of course, because this small investor is not going to give me some, more brokerages and all for providing services to the small customer. So it actually took me a few years to realize that I was wrong for this small investor, because even these small investors does have a right to get the premium service portfolio management advice from the registered advisors. So in 2021, I started. So I'm just telling you my personal story, how I started this Predict RAM. So in 2021, I started coding and programming and built this Predict RAM, who uses AI ML technologies to democratize all these advisory services. And in 2022 March, IIT Kanpur, selected us out of so many startups. And by the way, IIT Kanpur is the MIT of India. And they selected us for the incubation program. And what exactly they said, Subir, you have great product and the vision of your product. So now onwards, you have our full support. So you just please go ahead and let's make this product a movement. So IIT Kanpur is with us to make this product a movement in India, and F10 is with us to make this product a movement in the APAC. So yeah, so let me explain you what problem we trying to solve with. Yeah. So this is the problem I explained to you, that it's very expensive for the retail investors to get a premium advisory services. And the alternative for these retail investors are the unregistered sources like Telegram channels to get the advice about the market updates and few calls, but many of them are scams. And it's very difficult for retail investors to manage their portfolio by their own, because they have lack of knowledge, and it's very time consuming. And of course, for investors and advisors, it's very difficult to get in touch with each other, especially during the volatile market. So there is no time to explain things for the advisors to do all these blah, blah things. So what solution we offering? A simple solution we offering it to you, that the event-specific customized ETF suggested by SEBI-registered advisors to mitigate individual portfolio risk at low cost. So this is what the opportunity. So during my career, my focus was on these 150,000 premium clients. So actually, I was ignoring the 25 million, the market or the retail investors. So we have 25 million retail investors and only 1,350 registered investment advisors. So the ratio is 18,000:1. This means 80,000 retail investors and one registered advisor in India. So it's a huge gap. And all these 25 million retail investors currently holding 25% of this 500 billion securities in the form of equity, ETF, and mutual funds. So this is our market size, $125 billion total available market. And $12.5 billion is the serviceable obtainable market. And 625 million is the serviceable obtainable market. Yep. So this is the product for the investors. It's a simple and very easy to use product. Simple value at risk of your whole portfolio and the reduce risk button for the investor. When you click on this button, you will redirect to the event-specific ETF through which you can purchase any of the ETF which is going to be related to the upcoming market event, and your full portfolio is going to be hedged. So this is the product snapshot for the advisors. So we are providing AI-powered dashboard to the advisors so that they can manage and interact with current and the potential clients. So this is the competitor matrix that we have. We are providing easy to hedge the full-fledged advisory services, the premium advisory services to the user at very low cost. So this is our projection. By next 2 years, we're planning to capture at least 500,000 paid users and to partnership with the top 20 discount brokerage and the interactive brokers in India. So this is the business model from investors with portfolio up to $12,000. We're going to charge monthly $5 for these services. And for the high net worth individuals exceeding $12,000, we're going to charge initially upfront 0.5% fees and then 0.01% transaction fees. So this is the traction that we have so far, 1,500 plus beta signups since our launch. And we are registered and licensed with MFI registered mutual fund distributor. And we recently partnered with this discount broker, Fires, for the trade execution through API integrations. So this is what our ask. We are raising $500,000 to reach 100,000 paid users by next 12 months. And this is how we're going to use the fund. So this is our team. I explained you about myself. I'm having 12 plus years of experience in the financial markets and 5 plus years of experience in the coding and programming, and IIT Kanpur fellowship holder. And the co-founder is Sheetal Maurya. She's an assistant professor in Delhi University and also a whole-time member of Indian Accounting Association. Arnab Ray is the CTO, and he's having cloud-based backend infrastructure expert. So yeah, thank you. Thank you so much for your time. So.
Thank you, Subir. All right, up next we have Zach from Jojo World. Jojo World is a metaverse built from free stackable 3D spaces that allow users to create their own homes. Users can customize and decorate their virtual spaces with their own NFT collections.
Hi, hello. I'm Zach, founder of Jojo World. I have a question here. How many of you guys have an NFT? Please raise your hand. Oh, just so few. Why this happened? Why you guys have not entered into the metaverse yet? That's so sorry to hear about that. I guess maybe there are so many pain points in the metaverse. Firstly, it's quite expensive to use the products in the metaverse. For example, you have to buy very expensive virtual land in Decentraland in order to play the game. And secondly, I think it's not easy to use the product in the metaverse. You have to be very technical to use to build your space. Thirdly, there are very few social functions and low place to display NFTs. So in order to do that, Jojo World we try to fix this problem perfectly. And Jojo World is a space provider. We help our users to build these free 3D spaces. And it's quite cool, right? And within space, firstly, users can display their NFTs. And secondly, they can trade any NFTs within our built-in marketplace. And everything you see here are NFTs. And thirdly, they can use this as a social platform. And we are currently in the space construction sector in the metaverse. And space could be used in so many different kind of scenarios, including meeting, shopping, art, and parties. This is our product. It shows how to use our free coding tool to build space. These are the space built by our users. It's 3Ds. It's quite easy and convenient. And when you log in with the metal mask, all the NFT will automatically display on our platform. Just like this. And it's totally customized. It's totally customized. And the market goes very fast. Okay, it works. And by recently published Citigroup data, and currently the metaverse users is only 8 million users globally. And they think by the end of 2030, the global users will reach 1 billion. That's more than 120 times. And our business model, we charge say-end users for 2% transaction fee, while we charge 10% users for BN for 10% royalty fee. And currently, we are cooperating with Vogue and some high fashion brands such as Vivienne Tan in New York City. And our competitors, including Spatial.io and Mona in New York City. However, our strategies are quite different from them because we are serving general users while they are serving rich people, OG, and artists. And the JoJo World is a global project. We have communities in more than 20 countries, for example, in the United States, Canada, France, and Spain, Argentina, etc. And we did a lot of offline AMA events in Silicon Valley and in New York City. That's why we didn't spend a lot of money, but we accumulated more than 46,000 users since September, along with our online digital marketing through Twitter and Discord. And our pre-seed investors, including Stratified Capital from Silicon Valley, and we have Heritage Capital from Boston. And for this round, we are raising about $2 million US. Our team is very strong in user growth, product, and technology. Co-founder Alice, she used to work with the top 1 game company in China in user acquisitions. And the product partner, Lucas, he was in the senior management of Electronic Arts Asia. And I graduated from Columbia University, and I work with JP Morgan and the World Bank Group in capital markets and investment banking. Now I'm in charge of strategy and fundraising. And JoJo World's mission is to help humanity survive by enabling all people enter into the metaverse effortlessly. And I think entrepreneurship is a very long journey, and I enjoy that so much. I hope every one of you enjoy it also. Thank you.
Thank you, Zach. Up next, we have Delta Theta. Delta Theta is an options DEX where any trader can buy and sell options on the most volatile crypto assets with a brokerage license. Users can trade options in a P2P way within a regulated area.
Good afternoon. Today, everyone talks about decentralization, DeFi, especially after FTX stories. And especially this situation in crypto world very interesting for financial institutions because their clients would like to trade crypto because equities and fixed income is quite boring, and but crypto as a service a little bit complicated for financial companies. And the key problem that complexity and custody. If financial company would like to integrate crypto trading, they can spend huge amount of time for integration, huge amount of funds for integration and custody. They have to keep funds of customers. But in this case, they are looking for additional provider, and it's called counterparty risk. And here delta theta. And we can help financial companies to launch cryptocurrency trading extremely fast with all advantages of blockchain technology. We are a lightweight web application. We can be integrated on your internal website less than 24 hours. And customers trade in safe mode because all transactions, all orders, they can see in appropriate blockchain explorer. Just simple example, what we launched with Just to Trade. Just to Trade is the regulated brokerage house in the European Union. What we launched this summer. Very simple. Customers of Just to Trade pass KYC and AML, and then Just to Trade provide access to their website. And customers start to trade options from one wallet. That's all. Brokerage house doesn't have access to customer funds, and customers, they see all transactions in blockchain. Orders too. In a few words about options, why I'm focused on options. Of course, we can deliver spot, but options is more attractive. In part of options, keep in mind that, for example, in the United States, more than 70% of revenue of Robinhood comes from options. In Asia and many regions, for example, Indian markets, options are enormous. Regarding crypto, we have up to 5 times potential for growth in part of options. Every day, options traded for amount around $10 billion on crypto. Regarding our service, regarding our regarding our application, we like a Swiss knife, so we can be integrated with different blockchains. If this blockchain based on Ethereum virtual machine, it means we support Ethereum, we support Binance, we support Polygon, we support Aurora Near. If any financial company, they have one blockchain and this blockchain related with Ethereum virtual machine, yes, we can deliver solution. Customers can trade, can buy, can sell, can place any order. We support any wallet. We support MetaMask. We support all wallets which integrated with Wallet Connect. We passed 3 technical audits, and in general, we don't. Our solution doesn't need a liquidity pool. Regarding our team, for example, I spent around 15 years as an equity derivative sales trader, senior sales trader. I was an options market maker on the United States equities. We have strong advisors team. Alex, he was ex-chief product officer of Copper. Copper is a leading provider for financial institutional. It's like a gateway between classic institutionals and crypto world. And Rafael, he's the head of institutionals here in Singapore in Swiss Squad. Why our team wins? We grow, we understand who our client and what we have to deliver to our client. As I mentioned, we passed 3 technical audits, and now we are ready for next. We delivered 2 versions of our product, and now we are preparing for 3rd version. Regarding our growth strategy, now we achieved more than 2,500 traders. We have around 5 B2B clients, and we estimate that we will reach up to 3 times growth during next quarter. Our key targets, we would like to focus on B2B market in APAC region. We focus on B2C exposure, especially in India region, because we have strong support of Finsight and Polygon. and we will deliver unique features which help our clients in B2B to make more money. Why financial companies can make more money with us? In our world, I mean, in our decentralized world, customers are ready to pay more for trade because they trade and save more. When customers see that trade or order placed in blockchain, they are ready to pay more. For example, our clients charge up to 1% per trade. 1% per trade because customers see transactions in appropriate blockchain explorer. During the next 4 months, we will deliver two features, and these features can bring additional value, additional profitability for B2B clients. We deliver margin trading, and we speed up margin trading through Zero Labs. This is our roadmap for next year. And as I mentioned, the key feature, the Zero Labs, this feature allows us to significantly increase margin trading for B2B clients. And then during second half of this year, we will deliver opportunity to have cross margin. And cross margin is a king for any trading. This is our partners and clients. Actually, among clients, we have Maritime Capital. Maritime Capital is a hedge fund from the United States, and Just to Trade is a brokerage house from the European Union. Currently, we have been working with one client from Singapore, and our investors, Finsight and Maritime Capital, during previous round, and also Finsight participants in current round. We ask 2 million, and we ask 2 million for further development of product and our growth, and under safe and Singapore headquarters. Thank you for your time. Thank you for your attention.
Thank you, Daniel. Next, we have Rocket Capital. Oh, sorry, Happy. Happy enables easy credit and saving facilities for Bangladesh underbanked youth by providing mobile-first banking services. It provides full-stack digital banking services such as savings, deposit, investments, and instant credit facilities.
Okay. Hi, this is Kazi, the CEO and founder of Happy. Happy is the first credit-led neobank from Bangladesh, and our mission is to enable banking services and lending facilities for the underbanked youths like university students, young professionals, and young entrepreneurs. Why Happy does exist? In Bangladesh, there is already 52% of the population is not under any banking services because banks are still traditional or old school. They are branch-based and not digitized themselves to focus on the mobile-first young customers. As a result, when this young segment of customers are looking for loan or the lending for the bank, from the banks or NBFI, they are not getting it due to lack of previous credit history or banks' inability to actually evaluate them for the lending. So that is why Happy is introducing a banking app with the actually facilities with instant account opening and microloan facilities at 0% interest through the help of alternative credit scoring. And our solution is also actually matches with the Sustainable Development Goal number of 9 and 17 for bringing the financial development in the banking industry and also bringing the financial inclusion for the underbanked youths. So why now and why Bangladesh market? At this moment, Bangladesh is the 8th largest populated country in all over the world with having 170 million population. And interestingly, there is already 60% of the population age below is 30. So where there is a huge opportunity for these young customers to explore. And there is already 100 million plus internet active users in Bangladesh. But unfortunately, there is only 30 million bank account holders where we see the opportunity. Most of the customers, as I mentioned, is university students, young entrepreneurs, and young professionals who are mostly underbanked or unbanked. In our founding team, we have a very diversified and experienced founding team that can actually achieve the vision of Happy. Previously, I myself worked for Daras.com and Bupon.com, which are the two popular startups in the country, as well as my co-founder, Mr. Fazlur, previously worked for HSBC, Standard Chartered, and Eastern Bank Limited, and managed $500 million retail business in his banking career. And my other co-founder, Mr. Shadat, previously worked for startups like HelloTask and also two other tech companies like Tech Orbital and Max Priority. So what is the size of the consumer loan industry? Since we are a credit-led neobank, in Bangladesh, the consumer loan industry is $10 billion industry, and we want to achieve the 2% of this market, which is $200 million by the end of 2026. Our partner bank is one of the popular bank in the country named Dhaka Bank, which is our lending partner and balance sheet management partner. And card network partner like MasterCard, which is the card network giant, is our card network partner as well. We have already onboarded 14 startups to provide their employees this happy banking service with the instant lending facilities. And we have seen the 5.7K pre-product subscribers through our waitlist from their interest and growing 30% month over month. Our business model is very simple. We charge the subscription fee and other fees from the customers on their account maintenance fee and for the lending. And we have already raised 130K USD plus from the investors from different regions and got actually grant from ICT Ministry of Bangladesh. And our go-to-market strategy is very simple. We are actually partnering with the SMEs and startups for the corporate partnerships to actually onboard their employees and owners for these banking account services, and also going to actually onboard the universities in terms of partnerships to actually have their students under these banking services. And for the growth hacking, for the online growth hacking, we are going to follow like social media marketing and influencer marketing to actually have the customers through online. And our milestones for the next year, like 2023, after launch, we are going to have at least 15,000 customers with the lending amount of 200K USD. And by the end of 2026, we are expecting to have 1.5 million account holders with having the portfolio of deposit and lending of $250 million, and making sure the solid revenue number of $4.5 million and gross profit of USD $15.8 million. We are already in, as a neobank, we have the competition like with the regular traditional banks, but other than that, there are some lending platforms like Shadin Fintech, Wagely, and Mitro that are also doing the alternative lending. But we are different from them because we are enabling the banking service for the youths by providing them the official banking account, as well as they are getting the opportunity to get like 0% interest rate on their lending. And they are actually building their credit scoring facilities so that they can get the bigger loans like home loan or like car loan or bike loan after that based on their previous lending behavior. And we are also providing them the opportunities to make like cashback or discount offers on their payments. If we consider what are the similar models that works based in the other parts of the world, like the Dave, Jupiter, and Revolut, that are doing their best in their own region. And we believe that we can achieve our vision and build the best neobank of the country like Bangladesh because of having that experience of the market and the understanding of the market. And for reaching the milestones of 2023 and building the banking team, marketing team, and also the operation team, we are looking to raise 500K USD in $5 million safe notes. And that's all from us. If you want to join the journey of Happy and also the next revolution of fintech journey of Bangladesh, then you can connect us after this actual session. Thank you.
Thank you so much. Up next, we have Rocket Capital. Rocket Capital builds Web3 hedge funds with decentralized intelligence crowdsourced by a global community of data scientists through blockchain-based AI competitions.
Brrr, my God, I'm freezing. 1 second. Hey Siri, discover if Google is trying to kill me. Okay, here we go. I will bring you in the Rocket world where you can invest for free in Web3 funds driven by a distributed and decentralized artificial intelligence. No, guys, don't do like that, okay? I just started. I know what they are thinking about. What the hell this guy is talking about? Okay, let's make it simple. Data, on-chain data say that in 2022, people on the bearish market, 75% of people are losing money. 2 trillions of money evaporated from the crypto market in 10 months. Of those that invested through centralized entities like hedge fund or exchanges, 100 billion were defrauded by people like FTX, Celsius, BlockFi, 3RF Capital. Why it happened? Because centralized infrastructure have a big problem. You need to trust the people that are behind them. And there is a lack of transparency. So you don't know if this guy are investing your money or they are buying a 40 million penthouse in Bahamas, you know? On the other side, we have another problem. So DeFi is losing 75% from the beginning of this year. And why? Because Web3 is fantastic, you know, it's wonderful for the future, but there are some tech limit, you know. So basically, there's no hedging products. So you can go just long only. Otherwise, you cannot cover your portfolio. So with all this mess in mind, we are trying to solve this problem. Why? We want to have a solution that is high transparency as well as high performance. How can we do that? With the Web3 application that gives the onboarding directly with smart contract, where is know your transaction, where is the audit of the fund that is blockchain-based, completely blockchain-based. And all the trades of the share are based on Uniswap, so you can follow them. On the other side, we don't want to give up on performance. So we want to introduce products that give us the ability to make funds that are long, market neutral, short, and we do that just using perpetual derivatives. We use low trading fees, and we have a global community of 2,000 data scientists that work beyond this fund. So how does it work? It's very simple. To onboard with us, you have to connect your wallet, you choose your vault, could be long only, market neutral, short, or thematic wallet, and then you mint your share, and that's over. It's 60 seconds. And when you are tired, you can end your position just connecting your wallet. You can sell your share or redeem your share directly with us. Enjoy your profit. That's all. 3 clicks to onboard and 3 clicks to get out. So the market is huge. The market of crypto was 3 trillion in November 2021, and 500 billions are deposited on centralized exchange and decentralized one. So we are trying to target just a piece of this huge cake. We have competitors, of course, but competitors are or very decentralized or really centralized. So we are trying to find a solution that is in the middle, decentralized but very sophisticated. The traction of the company, so we got the capital market license from the MAS. We started 14 months ago. We have $500,000 asset under management, and we have fund driven by 2,000 global community of data scientists that work with us. This business model is very simple. It's 1% entry fee, 1% exit fee, and there is a swap fee on secondary market. We don't charge management and performance fee. This is the team. There is no rocket science, a rocket team. So I'm coming from the asset management. I've been a portfolio manager for 9 years, but then I've been involved in the crypto space 10 years ago. This is my third bearish market. Do you look at I'm scared? I'm not. The people that work with me is Giovanni and Roberto. They are people that have more than 20 years of experience in creating predictive model on the market, so algorithms. Roberto worked for Atomic Energy Agency, Giovanni for listed company, and our shareholder is Darren, that is a Cardano advisor, and Leone is a former owner of Valentino Fashion Group. So what we are looking for? We already raised 1 million in the past, and we also get a grant from Google, so thank you, Google. And now we are looking for 1 million to develop the Web3 application, to hire more developers, to grow up the community of data scientists, and make marketing and social media as well. So if you are a venture capital, let's build the Web3 together. If you are an hedge fund, an asset manager, a financial institution, and you don't know how to serve your client with Web3 funds, because you don't know, guys, you don't understand Web3, just partner with us, If you are a client and you want to skip all the intermediaries, just click your wallet and connect with us. Thank you so much.
Thank you, David. Next, we have Agrify. Unfortunately, the founder can't be here with us, but here's his presentation.
Hi, welcome to Agrify. Access to credit is a very big problem in India. There are 140 million farmers, 85% of whom lack access to formal credit. This is a $180 billion market, growing at 10% year on year. We are Agrify, a digital credit platform to help farmers access institutional credit for their farming needs. It is very simple. So the farmer downloads our app from the Google Play Store to apply for a loan. The Agrify credit engine builds a digital profile aligned with the underwriting norms of the bank to create an Agrify credit score, using which a farmer is able to access formal credit. Our app, Krishi Khata, is available on the Play Store with more than 60,000 downloads in the last 9 months, where in addition to loan, he can access a wide variety of features. The Agrify credit score is very unique, where we combine weather forecasting, price forecasting, remote sensing, in addition to the financial data of the farmers, to create a predictive analytics dashboard using machine learning and AI models to come up with a unique credit score that a bank can use to underwrite the farmer. Our revenue model stands on 2 pillars: a cut from the processing fee charged by banks, and when banks start to use our platform to start underwriting their walk-in customers, then we earn a SaaS fee. In addition to which, we also upsell products to the farmers like seeds, inputs, tractors, implements, and earn a commission on those sales. In the last 6 months, we've had very good traction where we have dispersed more than $200,000 in loans without any feet on ground in a completely digital model, and upsold more than $500,000 worth of products like seeds, inputs, tractors, and implements to farmers. The reason why we are unique is because we have a truly scalable model in agri-lending where there is no corporate guarantees or personal guarantees or first loss guarantees involved. We serve as a pure marketplace for agri-credit, and our go-to-market ensures that our cost of customer acquisition is nearly zero because we provide APIs to partners who want to provide digital credit to their farmers. And we are working with the RBI to further reduce the time taken to provide loans to farmers to about 3 minutes. And most importantly, we have a first mover advantage by building an Agrify credit score, which will eventually become a gold standard for agri credit underwriting for banks in India. This is the team. I'm Abhilash, a serial entrepreneur whose first startup got acquired for $18 million in cash. And Raghu is the co-founder and CTO with more than 12 years of experience in building technology and products at some of the most prominent companies like Cropping Technologies. We've raised about $350,000 in funding so far in a mix of CCPS and equity. We are funded by SOSV, the world's largest VC accelerator, with more than $1.3 billion in investments. We're raising a seed of $3 million to give us an 18-month trajectory to scale our business to about $15 million in transactions and become EBITDA profitable. Thank you.
Thank you so much, Abhilash. So next we have BitVision. Rebecca, please. So BitVision contributes to an important systematic component to further institutional adoption of cryptocurrency. The platform takes data from any blockchain or exchange, classifies it, and outputs it either as a standalone financial report or integrates it with existing accounting software.
Hello, everyone. My name is Rebecca. I'm co-founder and CEO of BitVision. BitVision provides asset management, treasury, and accounting solutions for decentralized finance. I personally have a corporate background, and I'm used to top-notch software solutions that have a really high grade of automation and data accuracy. So when I came across blockchain and decentralized finance, I was actually quite surprised that even though we are speaking about this public immutable ledger, we don't see a really sophisticated, sufficient automation in that space yet. So solutions like manual spreadsheet accounting or crypto tracking software and also legacy accounting software can't solve the problem. For sure, there's a huge missed opportunity in terms of gathering valuable financial intelligence and also optimizing crypto operations for those businesses. But most significantly, actually, we have validated diverse hypotheses, and we came up with, or we identified 4 major pitfalls for businesses that are using decentralized finance. So often they are forced to overstaff their finance department because they have to compensate for the lack of automation, so they overspend on salaries. Then they might not get licensed, or they might lose a license from governments if they can't provide proper auditable transaction tracking records. So they might actually be prohibited to operate in certain jurisdictions. Then they might also lose trust with clients or with investors if they fail to prove their reserves or other financial metrics that are really important. And then lastly, they might even face lawsuits or huge fines if they violate local laws. Bitvision's solution helps businesses with accounting and portfolio management. Our automation allows for accurate and complete data records, financial statements, and metrics. We integrate with any source, like a blockchain or decentralized or centralized exchanges. We source the data and provide financial intelligence so businesses can make better management decisions, easily file their taxes, and produce financial records. Also, we integrate with crypto payment, invoicing, and payroll solutions, so businesses can then actually optimize their financial crypto operations. With our dashboard, clients can review and look at their consolidated portfolio in real time and leverage forensic accounting analysis. So the businesses that we are targeting could be, so they're using decentralized finance, and they might be businesses that are a digital asset manager or a crypto exchange or a crypto bank that have high daily transaction volumes, but yet no proper efficient solution to account for these transactions. And as the market matures, we will see adoption will accelerate with traditional companies and also financial institutions as they diversify their investments and use crypto for payment and accept crypto for payment and use that for daily transactions. So the crypto or DeFi space is a really fast evolving environment, growing 40% annually, and is expected to reach $230 billion by 2030. There are 300 million SMEs worldwide. If we assume only a 1% adoption amongst these companies, we're looking at a client base of 300,000 businesses. And that's on top of the already existing 20,000 crypto companies that are crypto native. So our business model is a freemium B2B SaaS subscription tiered by the number of transactions processed on a monthly basis. We stand out amongst competitors as we are the only solution in the market that offers an all-in-one platform for crypto, for crypto business, income, expenditure, and balance sheet metrics, forensic accounting analysis, treasury management, and we also integrate with third-party solutions for crypto invoicing, payroll, and payment. Our go-to-market strategy involves B2B outreach, product-led sales, and working with distribution partners like tax professionals and accounting practices. We are currently pre-launch, but we are gearing up to kickstart in 2023. So here you can see some of our planned milestones. In our pre-launch, we've been working with 2 paid customers in partnership with an accounting practice in Singapore. And we signed up a waitlist of beta users. At the heart of BitVision is the team. I am a Swiss certified fiduciary with a strong background in tax reporting, financial and investment accounting, and meet Viet, my CTO. As a qualified tech lead, he has built a web app with Access Trade and scaled its usage to millions of users. We are currently fundraising and invite interested investors to talk to us. Investors, clients, partners, and regulators can reach us via email or LinkedIn or Telegram for further conversation. Thank you for your time.
Up next, we have Teora. Teora is a B2B marketplace for sustainable products, combining the power of information, technology, and accessibility to drive sustainability in supply chains.
Imagine a world where every product is sustainable, where that blazer, that notebook, your bubble tea cup from this morning, or your grab takeaway packaging from last night is all sustainably sourced. Hi, I'm Himmel, founder and CEO of Teora. Our vision is to accelerate the world's transition to sustainable product by simplifying sustainable sourcing. Climate change is driving new stakes at the table. Government regulations are evolving, consumer demand is shifting, and over 82% of millennials and Gen Z consumers are now factoring environmental impact into their purchasing decisions. Frankly put, if you're a business not transitioning to sustainable solutions, you will be left behind. But why are over 80% of businesses not transitioning? That's the journey that's the why we were looking for. After over 150 conversations with brands and suppliers, we synthesized the problem into 4 key areas. It's extremely complex, with over 400 different certifications to navigate. It's time-consuming, taking over 50 hours to source a single supplier. It's costly, carrying a 39.5% premium, and it lacks trust and transparency. Enter Teora, the first B2B marketplace for sustainable sourcing, where we connect trusted sustainable manufacturers and wholesalers with brands globally. But we're not just a marketplace. We reduce complexity through ESG information. We generate impact data to create transparency, and we offer financing solutions to make it more accessible. It all begins with supplier vetting. We create trust and reduce complexity through this process. The process involves looking at 3 key areas of a business: their certifications, their business practices, and the SDG goals, which we all verify. We then translate this information into digestible and easy to understand insights for brands, lowering that search from 50 hours to a couple of minutes. We slash the green premium from 39% to 10% with our direct-to-manufacturer model, cutting the middleman out. We have embedded a proprietary impact measurement tool into the platform. So basically, as a brand, you come onto the platform, transact, and you get access to impact data dashboards giving you information such as CO2 emissions. And lastly, we offer financing options that are traditionally only available to large enterprise, like net 30, net 60, or net 90 terms. Now you're probably wondering, how big is this opportunity? Well, over 80% of global greenhouse gas emissions come from supply chains. This shift provides a massive opportunity for us to target a $20 trillion industry to decarbonize supply chains. With this shift, it opens up an addressable market of $600 billion relating to sustainable products, a SAM of $30 billion, and a SOM of $2.4 billion. From a competitive perspective, we've identified 5 competitors. However, they lack a robust vetting framework, they don't give you access to impact data, and you have limited access to sustainable products. And you also have poorly defined sustainability credentials on the platform. So how do we make money? We charge a 10% commission fee on every transaction, a subscription fee for impact data, and consulting fees for enterprise customers. After launching our beta 1 month ago, we have over 1,000 products on the platform, representing the highest SKU base from any of our direct competitors. We have over 65 verified suppliers in 12 different countries. We have over 75 registered brands, and we are generating revenue. And we're currently doing some packaging tests with 2 big multinationals globally. So the dream team. We have a deep connection to the problem. Laura, my co-founder, started her own sustainable label where she experienced firsthand the problem of sourcing sustainable products. She also headed marketing for one of the most prominent tree planting blockchain companies in the world. I advise banks on the ESG strategies and how to transform them in terms of reporting, net zero targets, and carbon management. We also have a combined experience of over 20 years at LinkedIn and Accenture in strategy consulting, marketing, and B2B sales and operations. This places us in the driving seat to tackle this problem. I've said a lot today, but I'll leave you with 4 things. We're a climate tech startup, disrupting a $20 trillion market, revenue generating, and we're raising our pre-seed round of $500,000. If you're a brand that's looking to source sustainable, check us out. If you're an investor looking at climate tech startups, please connect with us. And let's build a better tomorrow. Thank you.
Okay, thank you, Himo. That rounds up our pitches for the evening. But before I end off, I would like to once again thank everyone that made today happen. So first of all, huge thanks to Google for providing us with this beautiful and amazing venue. Round of applause for Google, please. Thank you. All right, to our panelists as well, Ruben, Scott, and Yogesh for taking time out to join us today. And also for the startups for growing together with us the past few months. Over to yourself, the startups, a round of applause for them. To my F10 colleagues behind, hi guys, thanks for making today happen today together with me. And lastly, a round of applause for yourselves as an amazing, amazing audience. Thank you so much. Please stay on and have a chat with us for the networking session. Food and drinks are available. Alcohol, if you're into it, is also available at the back as well. So I'll see you all around. Bye-bye for today. Bye-bye.